Hey fellow traders, let's talk about why traders don't succeed in the stock market. Why 99% of traders fail. Why on average 80% of people that get involved in the stock market or day trade or just trade, why they fail. What's going on, guys? What's going on? Because you got into the market because some guy on YouTube said, hey, invest $100 and you can make millions in a week, or you can make $100 into $100,000 in a week. Or some guy boasting that he invested $100 and he made $15,000 in a couple of days or a couple of hours or whatever the case. And this is what you see in the market. This is what you always see. This is what you look at, and it gets you involved in the stock market and you think you can do the same. But that guy didn't even do it. Because I've told you a million times, trading is a 50-50 game. It's a coin toss. In other words, 50% of the time when you take a trade, it could win, and 50% of the time when you take a trade, it could lose. And this is why I think at the end of the day, 99% of day traders lose. And when I say that, these are actual tests that they've done. Why is that? And that's what we've got to figure out. Why is it? It's been bugging me. Why is it that so many traders fail in the stock market? Well, while you're here, guys, just remember that trading is risky and you could possibly lose money trading, because on average 80% of traders do lose money. And if you don't like losing money, you probably shouldn't even be trading. But guys, that said, let's look at the scenario, because it's really been bothering me as to why do so many people fail when they get into trading. And there's a few things that I've looked at, a few things that I've put together. I've been looking at the other traders. I've been looking at what everyone does, including myself, over the years in the beginning and whatnot. Look, when I started out in the beginning, which was way more than 30 years ago, we didn't have all the technology that we've got now and all the access to the lovely, easy stuff on the internet and all the YouTube videos, and you can just click a button these days and make a trade. In the old days, we had to pick up a phone and actually dial it in. Speak to a broker and say, hey, could you buy this for me? And we could only really invest in shares. These days, we've got all these wonderful products. We've got Forex, options, futures, CFDs. We've got indexes to trade on. We've got commodities that we can trade on. I've actually taken my day trading down to indexes and Forex. I mean, I don't even bother with the other stuff. And shares I only use as an investment. If I see a lovely stock that I want to buy, I'll buy it, invest in it, and just forget about it. Because stocks for me are just something so slow that I don't even worry about it too much. It's something you buy and you hold and you keep, and the old adage, an investment. But for fun and for day trading, that you got to use the Forex and the indexes for. And Forex you can't invest in. You can't hold Forex because it goes up and it goes down, it goes up and it goes down. Now the thing is, what's causing you all to lose money? What's causing everyone to get into the stock market and literally fail at trading the stock market? And a few things that came to mind. I was looking around at what other people are doing these days, and even, what people get involved in. And I think what actually happens quite often is a trader starts losing on the system that they've picked. And very much and very often that trader will go and try and tweak that system or change that system the minute it loses for whatever reason. Maybe they get 3 losses in a row, 5 losses in a row. And the psychology tells them the system's failed, the system's not working. So they rush out and they go and tweak the system or change the system. So changing your system every 5 minutes is one of the problems. But what's behind this? What's behind the causes? Because you change your system and then you fail again. And you change that system and then you fail again. And you just keep on failing time after time after time after time. And it's never working for you. You've been trading for 5 years and you're still not profitable. And you're wondering, why can't I become profitable? I've seen traders out there trying to average down or hedge their bets on a trade so that they don't have to take a stop loss, thinking if I hedge my bets, then I'll never have to take a loss. But that doesn't work, guys, because if you get that wrong, it's going to blow your account as well. You see, the thing is, if, for example, you want to hedge and you take a long trade and it goes against you, so then you take a short trade and then it immediately goes against you again, so then you're waiting for your long trade to take effect, but Now what's happening is it goes past your long and it goes into profit on your long trade. But that short trade that you took is still effectively there. That loss still exists. And so effectively with hedging, you have to get it right. You have to get out of the trade at the right time, just the same as if you had a normal trade. It's really not that much different. Just think about it for yourself, guys. So if it goes past the long and it goes into profit, now what do? When do you now get out of the long trade? And when you do you get out of the short trade as well and take that loss, or do you wait for it to go short? And when you're waiting for it to go short, it goes long again, and then you're taking even more loss. It's the same as just taking a stop loss, guys. That's not going to save you. Lots of people get involved in that. Then they get involved in averaging down on their losses, thinking, well, if I double up, then my entry point will be that much closer to my loss, and then I'll get back and I'll get out. That doesn't work, because so many times it just keeps on going and it just takes you out. In Forex, you've got a better chance of getting out of it, because it does tend to go up and down, and it does tend to be a reasonable way to get out of your trades with break even or whatever the situation if it goes wrong. But for me, if a trade goes wrong, I'd rather get out of it. But guys, the main reason, in my opinion, and you've been waiting for this, but the main reason traders are losing, and the main reason that 99% of traders fail, is firstly because they're trading time frames that are too fast for them and they're not used to the market. And then they're changing their system every 5 minutes. So you're not used to your system and you're not confident with your system. A lot of traders are actually not confident with the system that they're actually trading on. And then on top of that, your psychology is wrong, because winning in the stock market, what it involves is taking smaller losses and bigger wins. In other words, you have a stop loss. Your stop loss is at a certain point. You have a take profit. Your take profit is at a certain point. When it goes into stop loss, your stop loss should be about half of what your take profit would be if you're going to have a proper trade. If you're trading 1-to-1, try and get out of your stop losses before they hit stop loss. In other words, if you see your trades invalidating and your trade is no longer successful, sell it, get out of it as quickly as possible. If you see your trades going into profit and it's doing really well, either leave it to run or add to the trade. Make it better. Don't just get out of the profit as soon as it goes into profit. You see a little bit of green and you're like, click, I'm out of there, I made a profit, yay, here I go, off you go. Don't do that. Do that on the loss. When you see a slight loss, get out. Look, every trade you take, I don't know if you've noticed this, but it happens to me every single time I take a trade, it goes negative first. It always does, probably because it was going in that direction when you took the trade. Even though it was going the other way, it kind of always tends to go against you 80% of the time. That you have to accept. You have to let that run a little bit. That's why you have a stop loss. And then it normally takes the direction that you were expecting it to take in the first place. So, don't just get out every time you see a bit of red. But if it's turning against you and the trade is no longer valid, that's actually when you want to get out of the trade. So, my opinion, the reason so many traders are losing is because they don't have the correct psychology. And that's the cause of most of the losses. Is if you have the psychology right and you understand that when your trade's invalidated, you need to stop loss, you need to get out, you'll be a good loser. And if you're a good loser, you'll be a good winner. But if you can't lose and you don't know how to lose and you're trying to hold on all the time, you're gonna be a loser. You're gonna lose every single time, because holding on to the trade is one of the worst things that you can do when you're losing. It's gonna bite you, and it's always gonna bite you. So I hope this video helped you guys. I hope it sent you in the right direction. Go down and get your free Forex book and go and check out the secret blog, which has got a free trade in it every day for you. But as I say, there's also a Forex book in there for you, and it's fantastic. It's great stuff. You can go and enjoy it. It's for you. And the free trade, it's not trading advice. It's just an idea. The link is probably in the description or the bio or something to that effect. It's always there, guys. It's always there. I hope this video helped you. I hope it sent you in the right direction. I hope it gives you some advice. Just remember, it's all about the psychology. Watch the other videos. It'll give you a lot of insight as to where to go. Thanks for watching, guys. Cheers. Bye.